Hi, I'm John Persinos, editorial director of Investing Daily. Today, I'm interviewing Jim Pearce, chief investment strategist of our flagship publication, Personal Finance. Jim also oversees the trading services Personal Finance Pro and Mayhem Trader. Jim began his career as a stockbroker way back in 1983, and over the years has managed client investment portfolios for major banks, brokerage firms, and investment advisors. As we face the start of a new year, I've decided that now's an opportune time to tap his considerable expertise. In 2024, Personal Finance will celebrate 50 years of existence. Founded in 1974, PF has made money for its subscribers in bull and bear markets. Let's learn Jim's outlook for the year ahead. Jim, thanks for being here.
Hi, John. Thanks for having me.
You betcha. All right, let's get right to it. It's often risky, if not foolhardy, to make sweeping long-term predictions. An unforeseen event, for instance, a pandemic or overseas war, can throw an analyst's prognostications into a cocked hat. That said, investors need some sort of compass for the new year. Generally speaking, how do you think the stock and bond markets will fare in 2024?
John, I expect the stock and bond markets to rebound strongly in 2024. In fact, it may have already started. In early November, we got good news about the economy and inflation. As a result, the S&P 500 index gained more than 7% during the first half of the month, while the yield on the 10-year Treasury note fell from nearly 5% to below 4.5%. That means Wall Street no longer believes that a recession is inevitable. It also means that the Fed may be done raising interest rates.
You know, Jim, frankly, I'm sick of talking about the Federal Reserve. I'm sure you are too. That's not to say I'm critical of the monetary policy decisions they've made, but it'd be nice to focus on something else for a while. But we have no choice but to focus on the Fed. The central bank controls liquidity, and liquidity is the lifeblood of the financial markets. Wall Street is betting that the Fed will start to cut interest rates sometime in mid-2024. What's your view?
Yeah, I know a lot of people like to bash the Fed, but I think it's done an outstanding job of keeping the economy afloat throughout the pandemic and ensuing surge in inflation. If you'd told me 4 years ago that a pandemic was about to shut down the global economy, I would have expected the stock market to crash like it did 15 years ago. Instead, the stock market fell, but then rebounded quickly, while unemployment remained near record lows. That said, I think the Fed will be reluctant to start cutting rates so soon after raising them unless the economy goes into a tailspin. Of course, there'll be political pressure for the Fed to cut rates heading into the general election in November, but thus far, Fed Chair Jerome Powell has chosen economic stability over political expediency throughout this entire process. I see no reason to believe he will act differently in 2024, but at some point, a rate cut may be necessary if the economy bogs down.
Well said. When the Fed pivots, certain sectors that were laggards in 2023, such as utility stocks and real estate investment trusts, REITs, should become leaders. How else will sector rotation play out in the year ahead?
Right. So once interest rates and bond yields start dropping, income investors will once again revert to high dividend payers such as REITs and utilities. Also, consumer discretionary stocks should come back into favor as the cost of credit goes down. Finally, I would expect industrials to perform well as the economy expands. All those sectors underperformed the overall stock market in 2023. So the scenario I'm describing for 2024 is essentially a reversal from the prior year.
Okay, Jim, now's a chance for you to toot your own horn. Pinpoint major investment predictions that you made about 2023 that turned out to be correct.
Sure. So a year ago, I said a return to normalization will be the dominant theme in 2023. That turned out to be correct. As I expected, the stock market bottomed out and staged a strong rally. The Fed paused its steady stream of interest rate hikes in July, and the bond market firmed up. I also predicted that energy stocks would lose their momentum in 2023, which did in fact happen as oil prices fell over the second half of the year. I also stated that I expected the rate of inflation for food prices to drop in half from its peak above 10% in 2022. By October 2023, the trailing 12-month CPI rate for inflation was down to 3.3%. So I pretty much nailed that one.
Yeah, you sure did. Now, I don't want to put you on the spot, but in the interest of intellectual honesty, which of your predictions about 2023 turned out to be wrong?
Well, I absolutely did get one wrong. When asked for a long shot prediction, I said that I expected small cap stocks to outperform large cap stocks. At that time, I did not expect the Fed to raise interest rates as much as they did in 2023, which hurt small businesses more than big ones. For that reason, Wall Street shunned small cap stocks for most of the year, and that prediction proved incorrect.
Well, Jim, if it's any consolation, you were a year early because I think we'll both agree that small cap stocks are poised to outperform in 2024. Well, 2023 was a tumultuous year to say the least. You still got more things right than wrong. How are you positioning the personal finance growth portfolio for 2024?
I expect to add several new names to the personal finance growth portfolio in 2024. I only added two new positions in 2023 due to uncertainty over inflation. I added Tesla in January when it was priced around $120 a share, and 6 months later it was above $280. So I feel good about that. In September, I added Learcorp as an indirect play on the electric vehicle market. So I'm excited to see how it performs in 2024. Going forward, I will be emphasizing companies with high cash flows and stable operating margins that can invest in growth without taking on a lot of new debt.
Okay, what about the personal finance income portfolio?
Well, as we discussed previously, I think REITs will rebound in 2024, but we already have five REITs in the income portfolio, so I probably won't add any more. However, we only have two master limited partnerships in the portfolio, so I may add one or two once I believe oil prices have stopped falling. I might add another business development company since demand for small business financing should increase as the economy gets back on track.
Jim, you've called the investment shots at personal finance for nearly a decade. Over those years, you've racked up an impressive track record. I know this firsthand because I edit your copy. You've delivered some whopping gains to readers. Which of your recent investment picks make you the proudest?
Without a doubt, adding NVIDIA to the personal finance growth portfolio in October 22 was perhaps the best call I've ever made. At that time, it was priced near $115 a share. 1 year later, it was trading near $470. And as we talk, now it's around $500. I wish I could say they all turn out that well, but that was truly an astounding pick.
Yeah, you really hit that one out of the park. Uh, Discuss a couple of recent trades for your service, Mayhem Trader, that turned out exceptionally well for subscribers.
Sure. From July through November 2023, that's a 5 month period, the S&P 500 index gained no net new ground. It pretty much just got back to where it was. However, during that same span, I booked gains of 375% on a put option on Owens Corning, 66% on a call option for the Lovesac Company, 106% on a call option for Logitech International, 100% on a call option for Discover Financial Services, 367% on a put option for Driven Brands, and 108% on a call option for Dick's Sporting Goods. Don't tell me you can't make money in a flat market. I did.
That's really impressive. Jim, thanks so much for your time.
Thank you, John. It's been a pleasure.
You bet. My colleague Jim Pearce has just provided you with invaluable investment insights. Right now, we're making a special subscription offer for his publication, Mayhem Trader. To learn more, click the URL at the bottom of the article that accompanies this video on the Investing Daily website. Well, that's it for now. Thanks for watching.